What do you think about the stock of Tesla as one of the most closely followed companies on the market right now? Analysts keep a close check on the top electric vehicle manufacturer all year long as of Wednesday. The Tesla stock has already bottomed, according to Bush analyst Dan Ives. Don't miss this information at a time when EV competition is escalating globally. Dan Ives, a tech analyst with Wedbush Securities and a Tesla bull, stated that Tesla is evidently beginning to witness cracks in demand in China and the US. Ives lowered his price estimate for the company from $250 to $175 in late December. The final straw for the stock market was the price reduction that Tesla implemented. At Wedbush Securities, Daniel Ives, who goes by Dan, is a managing director, senior equity research analyst who focuses on the technology sector. He joined the company in 2018. Dan has worked as a tech analyst for more than 20 years on Wall Street, covering the software and broader technology sectors. He is a well-known technology equity research analyst and managing director with FBR Capital Markets, having worked there for 16 years. Dan's research interests include enterprise software, hardware, cybersecurity, cloud computing, big data, and mobile technology. Over the next 10 years, he plans to focus heavily on electric vehicles and disruptive technologies, which explains his preoccupation with Tesla and its stock in early November. Tesla stock was removed from Wedbush's best ideas list over Tesla CEO Elon Musk's Twitter debacle. Experts believe that Twitter has become an albatross for Tesla stock. And so Wall Street is reacting to the cross-contamination between social media and the automotive brand that said Wedbush analyst Dan Ives removed Tesla stock from his best ideas list and cut his price target to $250 from $300, although he still rates the shares at buy. Note that this was in November, and Ives has since cut down his Tesla price target to $175 in December at the time. A popular misconception about Elon Musk and Tesla merged Musk Twitter venture is the main reason Tesla shares have lost so much value this year, although Musk may have been giving signs that he may give up his CEO title at Twitter. Investors became concerned that the outlook for Tesla sales and profit is taking a turn for the worse. In light of this, Tesla has announced a rare sale, which some see as a sign of weakening demand. The company offered 2 rebates for buyers who take delivery of a vehicle before the end of 2022, initially offering a $3,750 discount in early December, later in late December until this Wednesday. Tesla increased that reimbursement to $7,500. Bush analyst Dan Ives stated that demand for Tesla is beginning to falter in China and the US at a time when competition from EVs is becoming more fierce overall. He also added that the price cuts that Tesla implemented were the straw that broke the camel's back for the stock market. Experts also surmise that the US economy may enter a serious recession this year, which would be bad news for car sales. Musk had previously stated on a Twitter space call that he believes will occur in 2023. He added that there will be some macro drama that is higher than people currently believe. According to Reuters, adding that homes and cars will be disproportionately affected by economic conditions in early January. Wedbush managing director stated in a new client note on Wednesday that the stock is way oversold on fears that the unknown is around the corner. Tesla watcher and Twitter ACO Elon Musk critic Dan Ives is sounding a bit more optimistic about Tesla stock after a major hammering to kick off 2023 with $5+ of earnings power still hittable in the stock in free fall. Since then, as was previously mentioned, Tesla stock has crashed by approximately 43. The main concern now for Tesla is that the demand story, particularly out of China, is showing heavy cracks in the armor at a time when EV competition is steadily increasing domestically, with NeoByteX paying and others fighting for a smaller pie with the Chinese consumer weakening. Ives has been highly critical of Musk's chaotic leadership at Twitter and off in front of the fierce sell-off in Tesla that began in the latter months of 2022. I've stated that since China accounted for more than 40 of Tesla's worldwide growth story, this is a major worry for the public and would probably lead to additional substantial price increases, reductions in the upcoming months to increase demand as a possible price under a more ominous macro backdrop. Competition for market share is waged. Ryan Brinkman, JP Morgan analyst, significantly lowered his price and profit projections, suggesting that he shares Ives' opinion. Following the release of Q4 delivery and production figures, Opponents of Tesla have questioned if the company's trillion-dollar valuation at its high in the beginning of 2022 was ever justified. This is one of the issues with Tesla's stock price. While having a fraction of the sales of any of the top 12 manufacturers globally, Tesla is valued at over $399 billion. According to Loop Ventures' Gene Munster, a fellow Tesla enthusiast, the company got ahead of itself in the short run, though it might take a very long time to get there. I still think this company has the potential to be much bigger. I think it will see those types of levels again. Elon Musk, the CEO of Tesla, stated in a prior earnings call that the company aims to boost sales by 50 annually, which contributed to its valuation. However, the company acknowledged in October that it will not meet this sales objective. Goal for the stock's notable increase this year due to Musk's reputation as a genius who would upend the vast global auto industry. It rose by 743% in 2020 alone. According to Ives, Tesla was perceived more as a disruptive technology business than an automobile, and a significant portion of that premium is due to mass. The Cybertruck, a Tesla pickup truck that was first unveiled 3 years ago with promises that production would begin in 2021, is scheduled to begin this year with a ramp up in production in 2024, putting it years behind other electric pickup offerings from Ford and upstart e-maker Rivian, both of which have electric pickups available for purchase today. Critics of the company, on the other hand, that a large portion of its extremely high valuation was based on promises made by Musk about future products, many of which came years after they were originally promised. Elon Musk suffers from an obsessive obsession with the truth. One of the biggest analysts who criticizes Tesla, Gordon Johnson, claims that when people call him a genius and innovator, it's because of all the promises he never keeps. Johnson also predicts that when Tesla shares are priced like other automakers rather than based on its promises, there will be a much steeper decline. According to him, Tesla needs to be building new plants practically every year in order to meet its growth targets. However, the company's newly opened factories in Germany and Texas are still not running at full capacity, and its plant in China had to reduce production because of the market's poor sales in light of the COVID restrictions. The market for vehicles in the United States has plummeted. He said, 2 months ago, you had to wait 2 or 3 months to obtain one. Now you can have one right away. This is the definition of surplus capacity. They will produce more cars than they can sell for a third consecutive quarter. Tesla is still by far the biggest electric vehicle manufacturer in the world, but traditional automakers like Ford and GM are starting to compete with it in some important regions, including China and Europe, where W and Bide are making inroads. Nothing improved by Musk's somewhat disorganized Twitter venture. Since Musk announced his interest in Twitter in April, the value of Tesla shares has dropped by over 65. And since he closed the deal in late October, the value has dropped by nearly 50. Investors are dissatisfied with Musk's apparent use of Tesla stock sales to finance a large portion of his $44 billion acquisition of Twitter. Musk, since his interest in Twitter became public in April, Tesla's largest shareholder, has sold shares worth $23 billion. However, on our December Twitter Spaces call, Musk made a commitment to stop selling Tesla stock until at least 2024. If not beyond, he hasn't fulfilled a prior assurance made in April that he would stop selling Tesla shares, having sold $14.4 billion worth of the stock since. Musk's claim that he will stop selling stock has been like Pinocchio walking the talk. Investors want to see him actually do the walking instead of just talking the talk. Ives still, according to Dan Ives, Tesla's worst ever year should only be seen as a painful transitory speed bump rather than the end of the story. For additional information, consider purchasing Tesla stock